Alright guys, welcome back to another video, and in this video we're going to be going over risk management, what risk management is and why risk management is so important when it comes to trading. And so let's just get right into it. So with trading, you have to look at it as a business. Every dollar in your trading account is your employee, and you want to gain more employees. You want to go ahead and grow your business daily. You want to compound. And in order to do that, you have to take trades that are not going to be too much risk, but are also a good amount of reward for the trades. And as you can see in our academy, we have great risk to reward management. But the main thing is when you're taking trades, you have pairs like GBP that will move 10, 15 pips, and those will be wicks, and those aren't the actual price movement, and those will get you out on your stop loss if your stop loss is way too tight or too short from your entry point. You're gonna end up unconsciously doing the wrong things over and over, and then that becomes a habit. And now you're wondering, why am I losing so many trades over and over? In the game of trading, there are different levels of awareness and understanding that traders have come to. And when you first come into trading, the majority of people are unconscious incompetence. And what does that mean? You don't know what you're really getting into, and you don't know what you're doing. So you're putting in the time to study, you're putting in the time to learn so that you could eventually get a grasp on what it is that you're learning, what it is that you're seeing on the chart, what the price is showing you, and how to better understand so you could trade better. And then that brings you to the point of conscious incompetence, because before you were an unconscious incompetent, you're trading unsuccessfully, you're not trading at all because you don't know what you're doing, you don't know how to trade as yet, and if you do, you're making mistakes and you don't know why you're making those mistakes. And so now, after practice, doing some study, you're starting to trading on a demo account. You're starting to see, okay, I'm making wins here, but I'm losing here because of this. And now you're becoming more aware. You're conscious of your trading, but you're still incompetent at the skill of trading. So over time, you find new techniques, you learn new things, you really hone down on your craft, and you get different methodologies, you establish successful trading habits, and then that ultimately makes you a conscious, competent trader. You have to think about every detail as you do it, and this is how you chart up your charts. You plot your charts to build your bias around why you're taking your trade, why you're entering, what is making the price do this. Now you are a skilled trader. You have a trading plan and you're going according to that plan. And then over time, as you do that and really master it, this is the point that everybody wants to get to, is the point of unconscious competence, because you've done those successful habits over and over again. You found out what makes you win and you just kept doing it over and over until you really had it down to a T. And now, anytime you look at the chart, you know exactly what you need to look for in order to take a trade and for it to go your way according to your trading plan. You're now an unconscious competence, so you can just look at it and you're able to see it and you're able to trade. And that's the point that we all want to get to. But it all starts with risk management. And so, for an example right here, this is a plain chart. Let's say we get this chart marked up and we want to make trades depending on which direction it's going. Bam, let's look at this. Let's say we want to make a trade here. According to risk management, we see that the market made a low right here, and then it made a high, then it made a higher low, and it made a higher high. So if you just made a higher low and a higher high, what do we expect the market to do? Make a higher low. And so according to risk management, we want to trade this higher low. We want to buy at the higher low. And what we're looking to buy, you don't want your risk to be, like I said, ideally any more than 50 pips. But in the case of many trades, it won't be that depending on which pair you are. And we are on the Australian dollar right now. So let's say we buy the higher low right here. This would be the higher low that it made. That higher low is only 7 points. So ideally, you want to put your stop loss below the low, the most recent higher low. You want to put it below, at least a few pips below the low, not exactly on it, because sometimes the market might rally and come back down again and test that area, and it might be a stop hunt and you might get wicked out. So that's why you put your stop loss a little bit below or a little bit above, depending on which direction you're trading, of the high or low that you're buying or selling from. And in this case, the higher low is only 7 pips. I put it at 10 pips, and this is the target area right here, which is 40 points. I'm risking $10 on a standard lot to make $40 off of this trade. That's a 1-to-4 trade. That's beautiful risk to reward ratio. And as you can see, this trade played out beautifully. Higher, low, higher, high. Higher, low, higher, high. And it just kept trending up. This whole move itself was 78 pips, 80 pips. So that would have been $80 on a standard lot. And you would have been only risking $10 if you would have held this swing. So in many cases, let's say you want to sell this back down as well. You see a beautiful double top pattern right here and an evening star form. So this is the lower low, the lower high. You want to sell the lower high. And look at this beautiful evening star pattern and an engulfing bearish. You want to sell that engulfing bearish, put your stop loss above the high, not at the high, but above the high, a few pips above the high, which is only $15. And if you're going for this point, just for this point that you have marked up right here, that's $24 you would have made. That's about almost a 1-to-2. But if you would have marked everything out, let's say you're going to for $50, you would have risked only $15 and made $50. You have to remember that in this field that we're in, this industry of the foreign exchange and commodities and stocks, this market is ruthless. You can't be emotional. And that's the number one killer that is going to affect your account in this market, in this industry, is your emotions. Your emotions will make you revenge trade because you lost money and will make you lose more money. Your emotions will make you greedy and you will see your cash diminish before your eyes. This market has done a lot to a lot of people. It has made a lot of people a lot of money and it has lost a lot of people a lot of money as well. This is the most hardest, easiest money you will ever earn when you learn the skill of trading. But you have to put your emotions aside. This is all logic based. It's about what is in front of you, what is the market showing you. You have to be adaptable with the market because the market flows how it flows. And you have to be able to make decisions on the fly to be able to trade in the right direction in order to make money, or else the market is going to take your money. You have to master the art of detachment from your trades. You have to let it play out and trust your analysis. That's the number one thing, is trusting your trading plan and your trading analysis. Let it play out. Set your stop loss. If it goes to it, it goes to it. If it goes to your take profit, it goes to your take profit, but you don't touch that trade once it is active. Set rules and follow your rules. This is all logic. Once the trade plays out, then you can always go back and see if it hit your stop loss. Why did it hit my stop loss? Where did I enter? Was this stop loss too tight? Was it too big? If it was a trade that went straight into profit, look at exactly what you did, why you took that trade, what was your signs that made you get in right there, and then jot it down and make sure you know why you got into every trade. Take pictures of your trade, keep a journal. These little things are going to help you really master trading, master little things such as risk management, and get your trading plan down to a T so that you can become an unconscious, competent trader and be able to trade and make money like you're a walking ATM. And that's the beauty of it. We all want to be free and we all want to just live life on our own terms, and this skill gives us that ability. But it comes at a price. And that price is you really looking at yourself and seeing the habits that you have as a person and how they'll translate into your trading, and analyzing that and making the necessary changes and adjustments to be able to be a successful trader and a successful person overall with better characteristics. And so when it comes to risk management, keep these things in the forefront of your mind. Your stop loss, whether you have a mental stop loss or a physical stop loss, should always be above or below any major wicks depending on your entry. You do not want to risk more than 50 pips maximum on any given trade on currencies. Treat every dollar in your brokerage account as an employee. You want to grow your employees in order to grow your business. You want to compound daily. And so you want to make sure that you're not losing too many employees on any given day. And if you do, you have to have the discipline to step back and back up from the market and say, hey, I lost today. Tomorrow's a brand new day. Let me go ahead and go over what I did wrong, what I could have done better, and tackle it tomorrow, next thing in the morning, and go on with it. You cannot hold any grudges. You cannot be emotional when you're trading. You must have a trading plan. You must have a bias as to why you're buying or selling at any given time. And I'm going to end the video on this note with a trading mantra. All traders should have a mantra. And this is just something that you stick to and you believe in. And the mantra starts like this: I will educate myself on how the market works. I will learn how to find and place a trade. I will create a trading plan and trade my plan. I will trade with equity management. I will not chase the market emotionally. I will decide to be a day trader or an overnight trader. I will be patient and wait for the market to set up. I will never trade without a protective stop loss order. The market will meet the criteria of my trade or I will not enter a trade. Go ahead and re-listen to that, write that down, and adopt that, and you will become a successful trader. Thanks for watching and see you guys in the next video.